Here's today's Money Metals Minute, brought to you by MoneyMetals.com. Gold and silver prices rallied last week, but it looks less likely that Fed officials will withdraw stimulus anytime soon. Many feel the economy is not strong enough to grow without loose monetary policy. Here is a special report now from Mike Gleason of Money Metals Exchange.
Well, much to the dismay of Republicans and a great many Democrats, the Democratic National Committee formally put up Hillary Clinton to be the next president of the United States. Hillary's coronation was met with boos, heckling, and walkouts by scores of rank-and-file Democrats. They believe, and with good reason, that their own party rigged the system on behalf of a crooked candidate.
It's the worst possible scenario for the Democrats on the week of their convention. 20,000 emails hacked and leaked by Wikileaks. Emails approved the DNC and the Clinton campaign did, in fact, rig the primary. The system is rigged.
You know, the system, folks, is rigged. It's a rigged system. I have seen firsthand how the system is rigged against our citizens, just like it was rigged against Bernie Sanders.
When we talk about a rigged system, it's also important to understand how the Democratic convention works. The way the system works is you have establishment candidates who win virtually all of the Super Delegates.
We can't fix a rigged system by electing the people who rigged it in the first place.
That, of course, was the voice of GOP nominee Donald Trump. He managed to do what Bernie Sanders couldn't and defeated his party's entrenched establishment. Trump successfully tapped into a populist wave of resentment against rigged politics and rigged media coverage. He probably couldn't have done it without the internet. It has taken power away from conventional gatekeepers of information and enabled alternative viewpoints to get out to the public directly without going through establishment filters. Old media is dying. Every month, more people cancel their cable TV and newspaper subscriptions and get more of their political and financial information online or even from AM and satellite radio. They go to websites such as Breitbart, The Drudge Report, and Zero Hedge, and they listen to podcasts. We've interviewed guest experts who have been ignored or banned by mainstream media outlets for daring to hold controversial views on subjects such as market rigging. Of course, the question whether the stock market or the bond market or the gold and silver markets are rigged depends on the definition of rigged. Does a cabal of central planners meet every day in a secret location to decide which way to move markets? Probably not. Is each and every down move in gold and silver prices attributable to a deliberate attack by the banking cartel? Again, probably not. Does the fact that market moves aren't always the result of manipulation mean that all markets operate freely and fairly all the time? Definitely not. The flip side of unrealistic conspiracy theories about rigged markets is unrealistic assumptions about fair, free, and perfectly efficient markets. The fairy tale story that banks never cheat, governments never intervene, and central banks never stray from their public mandate is demonstrably false. In recent years, some of the world's biggest banks have been hit with billions of dollars in penalties for manipulating interest rate and commodity markets. Earlier this year, Deutsche Bank agreed to settle lawsuits brought against it for rigging gold and silver markets. The German banking institution is now on the brink of collapse after overextending itself in a host of other markets. When governments and central banks manipulate markets, they, of course, go unpunished. It's no secret that the federal government has a plunge protection team called the President's Working Group on Financial Markets. It's also no secret that the Federal Reserve intervened so heavily in the bond market through quantitative easing that it became the largest single holder of U.S. Treasury securities. These aren't conspiracy theories. These are simply facts. So yes, markets are rigged, at least to some extent. There are institutionally backed traders in futures markets who are trying to drive down gold and silver prices right now. Maybe they will succeed in the near term, and maybe they won't. But in the long run, they won't be able to manipulate the physical supply of metal or contain the demand for it. Physical fundamentals will ultimately trump any paper shenanigans that take place in the futures markets. That's the perspective precious metals investors need to have. As long as the fundamental reasons for owning gold and silver remain, as long as you intend to hold your positions for the long term, there's no reason to let frustrations with a rigged system dissuade you from a prudent allocation to physical metals.
That was Mike Gleason at moneymetals.com. And right now, live prices at moneymetals.com. So gold currently trading at $1,349.40 per ounce on the global market. Silver comes in at $20.55.